In 2009, a strange piece of software appeared on the internet. It promised something that, until then, seemed impossible. A form of money that didn't depend on banks, didn't depend on governments, and that could be sent directly between two people, anywhere in the world. At first, almost nobody paid attention. A few curious programmers began using the system just for fun. The coins it created had virtually no value, but a little more than a decade later, that digital experiment would become one of the most discussed financial assets on the planet. It would create billionaires, alarm central banks, and raise a question that had never really been asked this seriously before. What if money didn't need the financial system to exist? This is the story of Bitcoin. To understand why Bitcoin was created, we first need to understand something fundamental about modern money. Today, almost the entire global financial system depends on central institutions. Banks process payments, governments issue currencies. Financial institutions control how money moves throughout the economy. For decades, this system worked relatively well. But in 2008, something happened that deeply shook that trust. The world was hit by one of the largest financial crises in modern history, the financial crisis of 2008. Major banks began collapsing. Financial institutions that had existed for more than a century suddenly disappeared. Millions of people lost their jobs, homes, and savings. Governments were forced to intervene and rescue institutions considered too big to fail. For many people, the crisis exposed a structural fragility in the global financial system. Money depended on trust. And when that trust disappeared, the entire system was at risk. While the world was still trying to deal with the consequences of that crisis, something unusual appeared in a small discussion group on the internet. On October 31, 2008, a message was sent to a mailing list used by programmers and cryptography experts. The sender used an unknown name, Satoshi Nakamoto. Attached to the message was a link to a 9-page document. The title was simple: Bitcoin, a peer-to-peer electronic cash system. In that document, Satoshi described a radical idea, a digital money system that would function without any central authority. Instead of banks validating transactions, a global network of computers would do that work collectively. Every transaction would be recorded in a public ledger called a blockchain. That ledger would be immutable. Anyone could verify it, and no institution would control it. Another detail made the system even more interesting. It was programmed to create only 21 million bitcoins, never more. Unlike traditional currencies, whose supply can expand through decisions made by central banks, Bitcoin would have a fixed limit. In practice, it was an attempt to create a scarce form of digital money. But at that moment, almost nobody realized how important that idea would become. In January 2009, the Bitcoin software was officially released. The network was activated, and the first block of transactions was created. It became known as the Genesis block. Inside that block, Satoshi left a curious message. It was a newspaper headline from that day. The Times, March 1st, 2009, Chancellor on brink of second bailout for banks. The message was a direct reference to the bank bailouts happening after the financial crisis. For many observers, it felt almost like a statement of principles, a subtle criticism of the traditional financial system. In the first months, only a handful of people were using Bitcoin, mostly programmers and cryptography enthusiasts. Their computers helped validate transactions and maintain the network. As a reward, they received newly created Bitcoins. This process became known as mining. At the time, Bitcoins had no real market value. They were simply digital numbers produced by computers. But slowly, more people began to notice the project. In the early days, Bitcoin was essentially a technological experiment. Users exchanged coins with each other just to test how the system worked. But in 2010, something happened that would become one of the most famous moments in Bitcoin history. A programmer named Laszlo Hanyecz decided to test whether someone would accept Bitcoin as payment for something real. He made a simple offer on an online forum: 10,000 Bitcoins in exchange for 2 pizzas. At the time, it sounded like a reasonable deal. Another user accepted the offer. And that's how the first known real-world purchase using Bitcoin happened. The pizzas cost about $40. Today, depending on the market price of Bitcoin, those 10,000 Bitcoins could be worth hundreds of millions of dollars. The event became known as Bitcoin Pizza Day, a small moment that symbolized the beginning of Bitcoin as an actual medium of exchange. As Bitcoin began gaining popularity, it also started appearing in unexpected places. One of the most famous examples was a website called Silk Road. The site was created by Ross Ulbricht. It operated as an online marketplace accessible through the dark web. On Silk Road, users could buy and sell illegal products. Payments were made using Bitcoin. Because the system offered a certain level of anonymity, it quickly became the preferred currency in that environment. This attracted the attention of authorities. In 2013, the FBI shut down the site and arrested its founder. But by that point, Bitcoin had already passed a point of no return. Even with Silk Road gone, the network continued operating. No government could simply turn it off. Around 2013, something unexpected began happening. The price of Bitcoin started rising rapidly. First a few dollars, then hundreds. Eventually it passed $1,000 for the first time. Investors began paying attention. New companies emerged to make buying and selling Bitcoin easier. Cryptocurrency exchanges appeared around the world, but with excitement came volatility. The price of Bitcoin also crashed several times. Drops of 50% or even 80% were not unusual. For critics, it looked like another speculative bubble. But for supporters, it was simply the growing pains of a revolutionary technology. One of the most remarkable aspects of Bitcoin is that it kept surviving. Despite criticism, despite regulatory pressure, despite dramatic price crashes, over the years, the network continued operating almost without interruption. More developers began contributing to the project. Companies started building services around the technology, and slowly, Bitcoin began to be seen not only as a technological experiment, but also as a financial asset. Some investors even started comparing it to gold, a kind of digital store of value. As time passed, even major financial institutions began paying attention. Investment funds started adding Bitcoin to their portfolios. Public companies began purchasing large amounts of the asset. Banks that had once criticized the idea began studying the technology behind it. At certain moments, the total market value of Bitcoin surpassed $1 trillion, something almost unimaginable for a project that began as a small experiment among programmers on the internet. Despite all this global impact, one question remains unanswered. Who actually created Bitcoin? The name Satoshi Nakamoto may be a pseudonym. No one knows for certain whether it refers to a single individual or an entire group of developers. In the early years, Satoshi actively participated in the project's development, but in 2011, he suddenly disappeared. He stopped responding to emails, he stopped posting messages, and he never appeared publicly again. The wallets believed to belong to him may contain more than 1 million Bitcoins, yet those coins have never been moved. The creator of the technology simply vanished, leaving behind one of the greatest mysteries in internet history. Today, more than a decade after its creation, Bitcoin remains one of the most fascinating financial experiments in modern history. It was born during a moment of deep distrust in the financial system, shortly after the financial crisis of 2008. Since then, it has continued to raise questions about technology, economics, and even the fundamental concept of money itself. If you enjoy stories about finance, economic crises, and the people who shaped the modern financial world, there are many other stories here on the channel. including our video about the 2008 financial crisis, and also a special episode exploring one of the largest financial frauds in history, led by Bernard Madoff. If you want to see more stories like this, make sure to subscribe to the channel. And if you enjoyed this video, leave a like, because there are still many fascinating stories in the world of finance waiting to be told.